So John, I don't think it's any secret that we are in a big time seller's market right now, right? And we have been for several years. And the folks that are, it really doesn't matter what market, because I think this is kind of just a blanket statement, but I think our veterans military folks are experiencing major challenges in every market. I always like to use the saying, going to a gunfight with a knife, because that's what it feels like. Agents have this not so good perception of VA and VA financing. Some of the stuff I always hear are it costs more to sell to a veteran than it does to a normal customer. Poor credit, never closed, don't have any money. I mean, the list goes on and on. So if you could, speak to our realtors that watch this show today about your perspective on VA and how they should probably start viewing it.
First of all, I want to talk about, CFPB just published a study a couple of weeks ago, and that study said that 8 out of 10 veterans, 78%, so roughly 8 out of 10 veterans that are eligible first-time home buyers are utilizing the VA home loan benefit for their purchase. So if you're not giving VA the option, one, you're selling yourself short. Sure. Because it's just part of the marketplace. The other thing is I would really kind of challenge some of these and dispel some of these myths because we've done a lot of work to improve the program, to improve the processes where our closing times are in line within 1 or 2 business days of all of the other loan programs out there. That's data not just from us, that's data also that's readily available from people like Ellie Mae, who control about 40% of the LOS market, loan origination system market. So you can go out there and look at at that data online. So I would challenge you to find a better program for veterans that they're going to utilize that would save them as much money as this program does. So low to no down payment. There's not a credit score requirement, even though we know lenders have overlays, on those over those requirements. Mm-hmm. But it's not even about that, because what we see is our veterans are tremendously competitive when you put them up against their civilian counterparts and getting, with other loan programs such as conventional and FHA. Veterans have very solid assets. They have income. They have, their ability to pay, because we look at residual income. So residual income, what that is it's a holistic look at the amount of total debt that they have, not just reporting on the credit bureau and what they have left at the end of the day. So because it's just as important for a veteran to stay in a home as it is to put that veteran in the home. So we really look at, if you look at that across the board, and then you look at the studies that have been done about the veteran population and how they acclimate into society, and where they are part of the community, and they are the volunteer in the community and those kind of things. It's really a win-win for everybody. So if you're not offering, this option for veterans, one, you're costing them money, and two, you may be costing yourself money, because that might be the best option for them to get into a home in your particular area.
So John, I love that. And so I think one of the things that agents don't understand either is kind of, so this is kind of, we're going to go down 2 directions here. Number one, I want to talk about the landscape of VA since 2012. And then I don't want to get off the phone with you today without talking about appraisals and NPRs. So, because that's another big hot topic with agents.